Good afternoon, everyone. Welcome to BreakpointTrading.net, the daily scan for November 11th, Veterans Day. First, I'd like to recognize all of our veterans who have served and thank you for your service. It's very important, and you guys do a great service, so we really do appreciate it on this November 11th. Today the market was open, but it was not a settlement day, but certainly was a trading day. So we're going to take a look at a couple of stocks that came up on the scan today. But before I do that, let's take a look at what the market did. We'll start off with the bias matrix, the homepage. Anybody that's interested, by the way, just come to breakpointtrading.net. And the free newsletter is right here in this little box. There's a link to the YouTube channel, so you can always get to it right from here. And then down here we have the total market trend. Right now everything's bullish, so it's green. And the market bias, you can see that we had a really nice uptrend right after the election, and today pulled back a little bit. Now, last week I said that I was kind of expecting that to happen this week, and I am going to spend some time today talking about Max Pain because Friday is options expiration day, and often with options expiration coming up, many times the market goes the reverse direction that it had been going. So we have been moving up, so I would certainly expect to see it pull back. Would actually be healthy for that to happen. If we look at the S&P right here, you can see that there's the bullish trend from last week. The end of the day today ended with a spinning top. So that is indecision, and sometimes can be a reversal. So if you look at it right here, you can kind of see where the market opened. It went up, it went down, and then it closed almost at the same place that it opened. Actually closed a little bit, 0.1%. So it closed at just about the same place that it opened. And you can see each of these candles were getting shorter and shorter as it's been moving up. And the one from Friday actually went up and pulled back almost at halfway on the candle. So each of these candles represents one full day of trading, by the way. And if it's an open white candle, that means it opened at the bottom and closed at the top. If it's a closed candle, that means it opened at the top and closed at the bottom. Think of it as a window shade. So if it's solid, that means it started at the top and the window shade got closed. If it's open like this, then that means started at the bottom. Actually, the window shade got opened and was left open. So today was a spinning top. I'll take a look at the NASDAQ also, which just broke out to new highs last week. And the NASDAQ too actually closed even more. It closed negative today. Not much, just barely, but you can see that it also traded up, traded down, and then came back right to basically the middle of its range. So indecision, it looks like this little rally might be running out of steam a bit. That actually would be good for that to happen. It would be healthy for the market to go sideways from here or pull back a little bit. We want to watch this major support level now, basically 20,700 roughly. So we want to watch that. We don't want it to drop below that. We'd like to see the 21-day moving average, the reversion to the mean, come up and meet that support line. But it would be healthy for the market actually to pull back before it continues higher. So we'll see what happens. This week, I think, might be an opportunity for that to happen. Okay, so let's take a look real quick at the VIX. If we go to the charts page on the left-hand side, under sentiment, you can see the VIX right here. And the VIX, again, stayed below 17. In fact, it pretty much stayed where it was Friday, right around 15. And that's good. That's healthy. That's what we like to see during a rally. And the rate of change continues to go down, kind of flattened out a little bit today. But we'd like to see the VIX continue to go down. That's complacency. It means that generally the market is trending higher. You can see right here how the S&P is sort of rolling over a little bit. So that could be an early indication that we're going to get a pullback this week. So we'll see what happens. Next, Let's take a look at Max Pain. Let's talk about that. Before I actually show you the Max Pain report, and I'll talk about earnings beats and Tom Bowley. He's the guy that publishes the Max Pain report, and I'll explain how he does it. Max Pain, basically, for those that are not aware, Max Pain basically is the difference between calls and puts. So as we go into options expiration, all of the calls that are in the money. So on the screen on the left-hand side, these are the calls. The right-hand side are the puts. Anything in this blue area or gray shaded area are in the money. And what I want to call your attention to is the open interest. So you can see here for calls over here, 38,000 right there. We'll just go up the chain, 26,000, 42,000, 25,000 up there, 20,000, 14,000, 12,000, 5,000 there. So you can see there's 18,000 at 460. Keep this 480 level in mind right around here. So those are all the calls. So what that means is all of those calls right now, because this is for the triple Qs or the NASDAQ, and this works for any stock that has options. Yeah, you can go to the CBOE, or I'm using E-Trade to do this, but you can go anywhere to see the calls and the puts. But right now, today, it ended at just about 514. So all of these calls that are below 514 are all in the money. Now, some of them that are, probably around maybe 500 and above have premiums attached. So they're probably just roughly breaking even. But the ones that are much below that are all in the money. So people that bought these calls, and it's hard to tell when, but they might have bought them a month ago, 2 months ago. They're all in the money, and they're hoping that it continues that way and closes it out at this level. Of course, the market makers that pay out the premium would be delighted for the market to go down so that they would not have to pay out this premium. There's 38,000 contracts there, 26,000 contracts there, 42,000 there. Now, if we look on the put side, people that are betting that the market is going lower, and on this side, the shaded area is on the bottom. So these are the ones that are in the money for people that were hoping the market would be lower. So they bought puts above this level that it's at, about 514. They bought puts down here. And right now, they actually will make money if it closes where it is. But look at the open interest. And remember what I showed you on the left-hand side. There's one for 5,000. And there's not much more. Not much more for puts in open interest. So just in general, just as a general rule, going into options expiration, you can tell pretty quickly that there's way more calls in the money than there are puts in the money. And the way to calculate max pain is you just multiply the open interest by the price level, the strikes that it's at. For both sides, you subtract the two. And if you get a positive number, then there's more calls. A negative number, there's more puts. So that tells you which way the market makers would prefer the market to go. So clearly there's more calls, which means the market's been going up. So before options expiration, and usually this happens just a day or two before Wednesday, Thursday, into Friday, and even carries over into the next week. So that's not to say that they will force the market down, but they won't do much to keep it from going down. So the market right now is kind of rolling over. It's had a really good run. It needs to rest. It needs to pull back a little bit. So it's a perfect opportunity for market makers just to let it pull back, let it roll over, and not have to pay out all of this call premium over here. Let them expire worthless, and they don't have to pay it out. So where is that number? Where is the number that creates equilibrium? Think of this as sort of a seesaw, like we used to go in the playground years ago. And you want to try to see at what point you can balance both sides. At some price on here, both sides are balanced. So let's take a look at the report. And this is from, I do that. Here's the report right here. So this is the report that Tom Bowley puts together from Earnings Beats. I'll show you it on his website in a second too. but I just got this today, and he does a lot of great work, some really good, interesting things. His website is well worth taking a look at. He also does lots of free training sessions. So he does a trading session once or twice a week where he actually shows you how he does trades. So it's pretty interesting. But you can see right here, here is Max Pain. For the Qs, it's at 480, right at that point that I showed you before. For the SPY or the S&P, which these closes are from Friday, but they're fairly close to where they are right now. So Max Pain for the S&P is 559. That's about 6% lower. And for the Russell 2000, it's about 8% lower. But again, I said you can do this for stocks as well. Now, one thing I want to point out and make sure that it's crystal clear is that this does not mean that that's the price these will go to. That is not what this does. That's not how to use this. This is just telling you where the equilibrium point is. That doesn't say that that's where it's headed to, but it will give you a sense for direction. And many times, and this doesn't always work every expiration. I think it probably will be generally directionally accurate this week because the market's gone up so much. There's so many calls out there, but it doesn't mean it's going to 242. It doesn't mean Tesla's going to 242. It just means that it's probably going to go lower by Friday and maybe into next week. Same thing with NVIDIA. This does not mean it's going to 115, but it's probably going to be lower than 147. So keep that in mind. But you can see right there, you know, how far away Max Pain is on a lot of these. Palantir, $39, 32% down. You just look at the bigger ones. Here's Axon down here, 23% for LRN. And we just follow this down. We can look at the ones at the bottom as well, which are positive. So what that means is there are more puts than calls for all of these stocks. That means most of these down here, people have already been selling them. So they've already been in downtrends. So there are more puts than there are calls going into Friday's expiration. And so for these to reach equilibrium, they actually would go higher. Now, notice there's not too many of them. So that really tells you that the weighting is really on the call side. The biggest one we have here is Mondelez right here, going from 66 to 70. But you can just see, you know, some of the names. Here's Verizon going up a little bit from 40 to 42. But that's how Max Pain works. I'll show you Tom Bowley's site and give you a sense for some of the things that he does. So there's the report he sends out every month. This is the online portion of the report. This is where you can actually, there's the ones that I showed you, but you can look at the Dow 30. So there's Max Pain for all of the Dow 30. Here's Apple, down 5%. CRM, down 17%. Again, that's not the price it's going to go to. It's just directionally likely the area is going to go to. So you can look at the NASDAQ 100, top 20 stocks with net premium. So you can see Tesla is number one. Tesla's got the most call premium, which makes sense because Tesla has had a fantastic week. Then NVIDIA, Palantir, Amazon, you can see all the Magnificent Seven right there in the top 10. So those are the ones with the most call premium out there. There's lots of other things that Tom's site provides, which are really useful. He has chart lists where he every week will update. He just updated these today, you can see. But he puts all the stocks, 443 companies that have beat Wall Street estimates on both revenues and earnings. So these are really valuable lists to have, and you can use them to run scans against. Short squeeze list, this is the one that I use to send out a short squeeze alert whenever they happen. So all of these are great resources. He's got some scans in here, just some sample scans, scanning strategies, ways to use. He's a big user of stock charts. So everything that he does, just like everything that I do, is in stock charts. So that's how I highly recommend taking a look at him and just sign up with your email. He doesn't charge you anything. You can do a 30-day trial if you want to, but if you sign up, put your email in there, he'll notify you whenever he has free training sessions, which are really, really useful. All right, so we talked about max pain. It looks like the market is probably going to trend lower for the rest of the week. I think that probably is the case just because we've had such a nice run and it looks like it's rolling over a little bit. So most likely that's the direction it's going. So now let's talk about the daily scan and see what we have for today. First, I'll show you what the current status looks like. Go back here and go to positions. So there's where we are. We added one today, Willdan Group, and I'll show you why we added it. All of them are positive except for Sentinel. So Sentinel is just slightly below our purchase point, but everything else is above, including Willdan, which actually executed about 1 minute before the close today. It was trading above 46, and I put the order in at 46, and it actually executed about 1 minute before the close. So that's sitting right on the execution point. So why did I pick that one? Let's take a look at the scans that we have today. I'm not going to go through all of them, but I'll show them to you just in case you would like to see what they look like. Here is, these are the ones close to the 21-day moving average. Bring this down a little bit. There's Willdan. So this is the reversion to the mean. That's what the scan does. It finds stocks that have pulled back close to the 21-day. So that's the one that we added. I'll look at the chart, and you can see right here, it's right went below it, pulled back a little bit. Actually had earnings on this day right here, but look at the previously what it's been doing. It's been consistently hitting new highs. Now it doesn't do that explosively. It's just a steady move up, and that's fine. As long as it doesn't come down and take out our stop, no problem with that. In fact, I'll look at it in the holdings list. You can actually see where the stop is right there. So that's where we put the stop at 73. Oops, that's not the one. This is the one right here. That's where we put the stop at 43, right down here, and we bought it at 46. So you can see the it's above zero, so it is confirmed uptrend. It's the momentum indicators. This one has just gone above zero. This one's about to. And the long-term MACD is heading up, and the accumulation distribution line is heading up as well. And if we look at it over here, it's above the cloud. It's above the 50-day moving average. It's outperforming its peers. So it's got everything that we want to see. It also had great volume today, and it does not report again until March 6th. Now, one thing that I changed on my scans is I put, it will not give me anything that has earnings less than 3 weeks out. So I don't have to go through the exercise of filtering that out. It does it automatically for me. So that was that scan. The next one that we ran was downtrend reversal for 52-week highs. This one has Rolls-Royce on it. I didn't like this because, first of all, there's too many gaps. This is a foreign company, so this isn't over the counter actually. Too many gaps, number one, and just didn't look like a great chart today. This is a biotech company. This one also didn't like the chart. Yes, it did go above the 21-day, but it had, the candle, it looks terrible, actually ended lower than it started. And it's not really outperforming anything here. So that one didn't impress me too much. Actually is outperforming its peers, but it's in biotech. So this can be very volatile. And then this one here, CDP, is in real estate. It's in REITs. Usually they are steady performers. You can see that, very steady performer all the way up. This one wouldn't be bad if you just want something that's not going to have an explosive gain. You just wanted to buy it, let it ride up. Probably has dividends. I didn't look at that, but let me see up here. Yeah, it does have a dividend, $1.18, and a yield of 3.64%. So this one does have dividends, but not a huge gainer, but certainly probably would be a safe one. But I didn't pick it for that reason. All right, so that's those. The next one is the downtrend reversal scan. Um, this one here has a property and casualty company right here. It pulled back. I didn't like the end of day on this one, but it's above zero up here. The longer term MACD, it's above zero right there. They're all moving up. So in general, it looks okay, and it's above the cloud and above the 50-day. So this one actually would be a candidate, but I did not pick it. You guys certainly could if you want to. This one we looked at already, and yeah, we looked at all of these already. Oops, IBM was the other one. IBM hit the reversal, so you can see IBM reported back here. Sold off after earnings, but it is not above the 21, and it is right at the 21, but it is not above it. So the reversal scan looks for something that has been going down for a period of time, and then has a little bit of an uptrend, and that's what IBM has. However, against its peers, it's starting to underperform. If it goes across the 0% line, it definitely is underperforming. The accumulation distribution looks okay, but it's pulling back. But more importantly, it's in the cloud. It's below both the 21 and the 50-day moving average, and it's below zero up here. So that's why I didn't pick that one. And then the last one I think we have is, that is the last one. So that was it. So that's why I chose that particular one and added it to the list. We'll go back and just run through each one. Here's DocuSign. It had another gain today. Again, I said I'm not going to move the stop up. We certainly could have moved it up, maybe to the bottom of this candle right here from Friday. But I actually would like to see it pull back some and then start to move back up again. And then I'd move the stop up. And for those that want to, put in half in the beginning and add more later, that would be the time to add. If it pulls back and starts moving up again, that would be a great opportunity to add. But right now, we're going to just let it ride. Google kind of went sideways. It gained today, went down Friday, but gained some today. So we're not moving the stop on that one. Oracle actually ended basically flat for the day, but it actually started off pretty nice and then pulled back a little bit. That's kind of what the whole market did today. So Oracle is sort of going along with the rest of the market. Again, this is one I'd like to see pull back. I'd like to see the 21-day come up and meet our stop line and actually move above it. At some point, we could use that as a stop, but right now, that's what I would like to see with Oracle. Powell has been a great one. We bought in back here. I actually moved the stop up on Powell today, so it was right back here at this resistance level, and I moved it up to the bottom of the gap. So there's the gap right there. I moved Powell right up to the bottom of the gap. We'll look at that. It actually went higher, but pulled back. That's why it has a black candle, because it's higher than Friday, but lower than the open. That's why it's a black candle. Raytheon, we added Friday. Raytheon actually moved higher, but pulled back from its high of the day. I'd like to see this get above zero. Everything else is okay. The accumulation distribution, though, kind of ticked down a little bit, so we need to watch that one. Some of these ones that we just got into were right before this week, before options expiration week, so they may actually experience some pullbacks. And this is Sentinel, the only one so far that is below our buy point, just really barely below. But now the stop is right below the 21-day moving average, which is a place I like to have them. So the stop is okay, although we'll lose money if it gets down that low. VRT, this one is, again, we'd like to see the stop come up. Everything else is looking good. The MACD, everything's positive. The accumulation distribution looks great. This down here is money flow is moving in. It's above the cloud, well above the 21. And the 50-day moving average, this one, if it pulls back, probably won't go much below the 21. So hopefully that's the case. And that would be right where our stop is. So that one should be okay. And here's the one we just added. So there's Willdan above the 21. It's above the zero line. Everything's looking positive, and it is above the cloud and above the 50-day. So those are all the reasons I bought that one. So we'll continue to watch it, see how they do. The one that I added to the watch list is Builder. So this one reported recently. Oops, wrong one. I didn't put the link in here. Here's Builder right there. So just above the 21-day, but below the 50. So the suggested buy price is wait till it gets above the 50-day, which right now is right at 185. And I'd like to see this move up. The histogram has gone above zero, but I'd like to see the line move up above zero. The other indicators are just starting to move. So this could be an early move on this one. This has consistently been in the top 10 on the lists over and over again. So, and it's also in the industrial sector, which is a very strong sector right now. So this one might actually have an opportunity. It needs to prove itself a little bit more, but you can see that's the reason I put it down here under the pending trades or the watch list. Zeta reported Zeta actually reported tonight, but I don't know what happened. Let's see. Zeta, after hours, it's up 36.74. So you can see here the high today was 38. So it hasn't got back to the high, but right now it's up. It looked like their earnings might be okay. So Zeta might continue to go higher. It might pull back with the rest of the market. It's already had a really great run just before earnings. So, this is one that would have been a good one to get into. I didn't because it was so close to earnings, but I'd rather get in like back here when it hits the scan, right at the 21-day moving average to give us plenty of time before earnings. But it looks like earnings were okay with Zeta. And then Affirm is actually looking better today. Affirm looks great. And this is one that we probably should have listened to the daily scan and bought it right there when it hit. It did go up and pull back, but it took off today. So up almost 24% today. So again, it's a testament that this system works. But sometimes I didn't get into these because they were so close to earnings. So again, I'd rather get in like back in here, and that's what will happen this time. This one, all of these would not have even appeared with my new scan because I'm looking for something that's more than 20 earnings are more than 21 days out. So on this one, it would have hit right here, and we could have got in and had plenty of time. All right, so that's it for today. Thanks for listening. Please hit the like button, subscribe. I want the YouTube channel to be successful, and give me any comments that you have as well. By the way, it makes me think that one person asked me about this stock, Sophie, which is also taken off. So consumer finance looks really good. Earnings were on the 29th. So back here, looks like they had great earnings. This one probably would have hit the scan right here, or definitely would have hit the scan back here. And we could have added it right back here. And that was at about $8, and now it's almost a double. So up 8.5% today. Sophie looks really good. Let's look at it this way, well above the cloud. It's kind of extended, so it often doesn't go that far above its 21-day moving average before pulling back. So I wouldn't get in right here because it's too extended. But if we look at 1 year, look at that. Huge move over the last year. And here's a 2-year chart, well above the cloud. Right here, started above it. So the end of September, you could have got in. But looks great. Sophie looks great. I wouldn't get in right now because it's a little too extended, but certainly would be one to watch because if this one pulls back to support, which is right here at about 1150 or 12, right in this area. And the 21-day moving average continues to move up, which is right now at 11. So if that moves up to 12 and this pulls back to 12, that would probably be a good opportunity on that one. All right. Thanks for asking that one. And anybody else that would like me to take a look at a chart, just let me know what you'd like, and I'd be happy to do it. All right. Thanks, everyone, for joining. Please subscribe and hit the like button, and I'll talk to you again tomorrow. Take care.